In this tutorial, I'll be teaching you AOSL symbol, and I'll just copy that and I'll paste it and I'll write stock beside it. And this information on the left is from Google and on the right is from Wikipedia or whatever. And you can see the name of the firm. And I'll just tell you what's the, you can see from here, if you buy the stock right now, how much it will cost you per stock in US dollars. It's USD, which is the currency. So I'll just copy that and paste that here. And if you want to see when was the firm born or founded, you can see here it was founded in 2000. So it's everything is in Google. Oops, sorry. And then I'll explain you the sector later on in the video. What I'm more interested in is the four ratios. The website that I most often use for ratios is MacroTrend. That's the website, macrotrend.net. And I go to price ratio, then price book ratio, and then I just paste in the symbol of the firm. I'll just get the symbol from here and paste it, and I make sure that the name besides the symbol is the same one with the stock. Okay, because sometimes 2 3 stocks or more than 2 stocks have the same symbol. So in case it's Alpha and Omega, that's the one. So that's fine. And I'm looking at price book ratio right now, and for 2019 28th June, so it's the current information and it's 0.51, which means that the stock is quite undervalued and it's a bargain right now, because if it's one, that means the stock price in the market and the book value is the same, which is very good. But if it's below than one, then it means that you're getting the stock at bargain. It's very cheap right now. And so you can see that the book value is, for example, in 2019 March 31st March, the book value, the real value is $18.34, but you can buy it for $11.51, so you're buying it cheap, and so on. And in 2017 December, it's exactly the same as the book value, nearly the same. So it's 16.44 and you can buy it for 16.36. And um, then previously, like before, in 2017 and 16, it's a bit expensive than book value, and then in 2015 it's been very bargain. So it's been a bargain since 2011 to 2015, and then from 2018 March up till now, it's a bargain. So it's very undervalued. If somebody wants to buy it now, it's a good thing. Then I'll look at other ratios, and current ratio. The current ratio should be 1.5 or more than that for it to have a good margin of safety. So it means that the assets are more than the liabilities. So if I look at the current information I have is of March 2019, so I don't have a current information of June right now. So I need to look into that. But it was 1.83, which is above 1.5, which is really good. It has good margin of safety. So, and if I look at the consistency of it being above 1.5, it has been consistent throughout from 2010 until the data we have. So it's really good that it's above 1.5 altogether, which makes it very secure, and it gives a good margin of safety. If I look at debt to equity ratio, I need to know that if the company is operating a lot on debt or on equity. So if it's 0.5 or less than that, then it's really good. It has good margin of safety, which means that it's not operating a lot on debt, it's operating mostly on equity, which is very ideal. And in we have data until March, so it's 0.25, which is really good. It's below 0.5, so mainly it's operating, even though it has a debt, long-term debt, but it is mainly operating on equity. Equity is a lot more than the debt, so it makes it easier, there's more margin of safety, it's more safer. So if I go back and if I look, it's never been above 0.5, so which is really good for the firm. And then there's return on equity. It means that how much the shareholders have invested, what return they get. We don't have the data for that here, so it's very limited data, but it should be 8% or above that. So we have only information until 31st March 2019, and it gives us the equity of 4.77. It should be 8% or above that return on equity for it to be safe to invest, but we don't have data before 2019 March, so I don't know about that. We need to look into that as well. And still it's 4.77, which is not very good, not ideal. Okay, and let's look at the dividend. If I look at the dividend from Google, I can see there's no dividend being paid off to they don't pay any dividend, so which could mean that you know, they might not be financially that good that they can pay the dividend or extra money to their shareholders. So they might be investing all the money in the firm and they don't have enough, they're not generating enough to give to their shareholders. So dividend is very important. And then there's I want to know if it's a big company or small company, if it's a billion company or million. So I can see the market cap, which is it's in million, 226 million. So it's a medium-sized company, I guess. And I can see the patents as well. So I'll just go to Justia Patents, which is the one I use. And you can use any one that you know of. I just use this one. And I'll just copy exactly the name from the Google and I'll see if it has any patents. I'm not interested in inventor because that person has invented, but they might not have the full rights of the patent. So I'm looking for people or the person who has the or entity who has the full rights, which is the applicant and the assignee. So if you see applicant or assignee, yeah, that's assignee. So they have the full rights of patent. So I'm just interested in that. So if I see yes, in 2012 they have patent, yeah, filed patent. Then 2012 December again, there's another patent. 2012 December, yes. Then in 13 Jan, then in 2012, then 13 February. So a lot of patents like after a few months. 2017, which is a recent patent, which is very good. 2009, 2015, 13, and so on. So it has a lot of patents, and then you can just go through. And I'm interested to know that if they have recent patents in 15, 16, 17, 18, 19, because you know it means that they're still innovating, they have a competitive edge, they have a moat, and they are strong because patents give you a competitive edge. The more patents they have, the better, and you need to find out if they have recent patents because are they still innovating or they have just stopped innovating. That's very important. So it shows it's very good. And if I go to Yahoo Finance, I want to know what salary the key executives get, if the company has shown it or not. I'll just paste that here, and I'm not getting AOSL. Okay, AOSL, that's the one. So you need to be careful about the name and the thing, the the symbols. Go to profile and you can see the sector technology. Here's you can see sector, industry, semiconductors, and the employees. And you can see that they have 5 key executives and their titles, and only one haven't shown their. You can't see the pay, but the rest you can see the pay. So the more transparent it is, the more better, and that's really good. And then I just want to show you one more thing, which is I want to show you um, the reviews in Indeed, because it shows like how it's like working for this company. Because some reviews, like there are 4 reviews, so I won't be too much, 4 reviews is not enough to analyze the firm, so I'm not sure if 2.8 reviews are fine or not, but you can just think about it, read through it. Then I'll just go in the Glassdoor as well, and I can see the reviews. But Glassdoor have sorry, Glassdoor has 31 reviews, more than Indeed. But still, it's not a lot of reviews. But still, you can just have a read. It gives you 3 stars, which is better than Indeed. So, it just gives you kind of insight. So, as much as you can understand, because the more information you have, the better about the firm.